Timothy Massad is a former CFTC Chairman and Treasury Department official who is one of the influential voices focused on how to regulate cryptocurrencies. He's currently a research fellow at Harvard's Kennedy School of Government. Welcome, Timothy. We want to discuss your new report on stablecoin regulation that you co-authored for the Brookings Institution in just a moment. We're going to pause on that. But first, your thoughts, as specific as you can get, on government officials asking that an independent examiner be appointed to look into crypto lender Celsius Network's collapse. What do you make of that?
Well, look, I think the collapse obviously hurt, hundreds of thousands of people. This is, I think, an excellent example of why our regulatory framework is inadequate. Celsius was a lending platform. It should have been regulated properly as one. Exactly how we go about, assessing the damage and rectifying that, I think there are different views. So, my suspicion is the SEC is already looking at this. So I'd like to know more, I guess, about what their thoughts are on this first.
Chairman Massad, welcome back. The question I've been posing a lot of current and former CFTC commissioners and SEC people is whether or not, first of all, does this kind of stuff expose a potential gap in the difference between what the SEC does and what the CFTC does? And does it raise the question that either there needs to be a third agency, and I think I've mentioned this with you before a while ago, or perhaps even a merger of the SEC and CFTC, which I think people would be, it's sort of like, I don't know, merging the NFL and the NBA. I mean, like the way people discuss these things. But nonetheless, I mean, does it raise that question that maybe perhaps there is these almost 100-year-old institutions aren't capable of handling a new economy and the digital economy as well as they could, and that perhaps we need to rethink how regulation is done going forward because the world has changed?
Well, there is a gap between what the SEC can do and what the CFTC can do. But that's only one of the problems. Frankly, one big problem is a lot of people in the crypto industry don't believe the laws apply to them or don't want to think about how the laws might apply unless they're really forced to do that. Look, the SEC brought a case against BlockFi. One would have thought that effectively centralized lenders such as Celsius would have taken notice and maybe thought about, are we in compliance? Now, I don't know what they did. I don't know whether they talked to the SEC at that point, but that's one of the problems we have. The SEC, is kind of overwhelmed by the size of this market and the amount of activity it needs to be policing. There is the gap. There's a gap with respect to regulation of what I would call the cash market for crypto assets, which are not securities. And I wrote about this, over 3 years ago now. Neither agency has the power to do that. Now, one solution that I would advocate, and I'm coming out actually with another paper on this with Professor Jackson at Harvard Law School, is that the SEC and the CFTC create a joint self-regulatory organization that they would oversee and they would pass on its rules. But that might be a way to develop standards for this market without getting bogged down in this question of, is it a security? Is it a commodity? If it's a commodity and it's being traded in the cash market, what do we do about that? You would create this joint organization and you would make the industry pay for it. That would be supervised by the SEC and the CFTC. It would not be like what people sometimes refer to as the industry's self-regulatory efforts today. We've seen some of the trade associations come out with standards, but those standards are much too weak. So that's one approach to deal with this problem.
until an SRO is created or potentially created, there are proposals nonetheless going around now that the CFTC should oversee the cash markets, as you mentioned. And there's a belief that actually that this is being pushed by the crypto industry because the CFTC relative to the SEC is underfunded or not as well funded, and therefore the crypto industry can get away with murder, so to speak, compared to what they could do with the SEC. What do you ran the CFTC?
Well, I am
what do you
concerned
take?
about that. Yeah. I'm very concerned about that because the CFTC was underfunded when I was there, and we didn't have this additional jurisdiction, but we didn't have the resources to do the things that we really needed to do. So if Congress is going to give additional authority to the CFTC, they've got to provide sufficient resources because this is a huge market. It's small relative to the size of our capital markets overall, but nevertheless, it's very large in terms of the amount of activity that needs to be policed and for which we need to develop standards. So I am very concerned about that issue.
All right. We got specific questions about your report. The part of that report, in quote, I'm going to quote you, where you say you would like buy-in from both Securities and Exchange Commission and the CFTC. That would be highly desirable, and we recommend that a working group of the Financial Stability Oversight Council quarterback this coordination. What I want to ask you, since there was an NFL analogy a short while back, is that it's going to be very difficult for the quarterback there to throw the ball because you won't know who to throw it to half the time.
Especially if it's a basketball.
Look, our proposal is advocating a way to regulate stablecoins under current law. Now, we would welcome legislation if Congress can agree on it. We're just concerned that they may not be able to agree, and we really need to create a better regulatory framework for this activity. I think stablecoins are a very important innovation, and they could bring a lot of benefits to consumers in terms of faster payments, cheaper payments. They could help promote the role of the dollar in international commerce, but we don't have a regulatory framework. The key way in which we need coordination is actually among the banking regulators, because our proposal advocates a structure under which stablecoins could be regulated today under existing banking law. Let me just give you one example of why this is important. Today, if a stablecoin issuer had a problem, defaulted, went bankrupt, that's going to be handled through normal bankruptcy law, which means people aren't going to get their money. The assets are going to be subject to an automatic stay. The holders of stablecoins are going to be treated along with all other creditors. What we're proposing is a way to create a special purpose structure where resolution would be in the hands of bank authorities. So you would have a very efficient way of resolving an institution. But more importantly, this would not need deposit insurance. It would provide for consistent federal standards. Right now we have state regulation, which, some states are trying. New York has come up with some good standards, but it can't solve these problems at a state level. So we would have national standards, we would have restrictions on the investments, and a well-regulated stablecoin could even be given access to a Federal Reserve master account. So our proposal is a way to create a framework under existing banking law that could bring this activity under regulation and still promote competition, promote innovation in payments.
But you alluded to this a little bit a short while back when you were talking about the fact that you don't really see the Congress coming up with legislation effectively. So my realistic question to you is, just to manage expectations of our listeners and anyone watching, when do you see such a regulation coming? Because
I'm not saying Congress won't. Realistically, I can't predict what Congress will do. I've learned that over the years.
But you can use your empirical experience. to suggest.
Well, look, the good news is that a lot more people in Congress are paying attention to this subject. That's great. And there have been more proposals, both as to regulating stablecoins and as to regulating the broader crypto market. That's a good thing. But there are still, very divergent views. So I just can't predict whether Congress will come together on a particular approach. And I'm just suggesting ways that the Biden administration can still take action if we can't get legislation real fast. I hope we can. That would be great. But I'm not gonna give you odds on whether Congress adopts something.
Okay, another prediction is required out here. where do you think Terra stablecoin goes from here? There's just so much interest around that. We just love your opinion on that.
I'm sorry. Where do I think?
Where do you think Terra stablecoin actually goes from where it is?
Look, I think Terra was a really flawed scheme that obviously was very heavily dependent on the Anchor protocol as a way to encourage people to buy more Terra, deposit it in the Anchor protocol, and receive a return that could not be sustained. It was very clear it could not be sustained. I think algorithmic stablecoins need to be regulated also. Our proposal doesn't address those per se. Our proposal focuses on the ones that are truly backed by fiat currency and by assets that we're all familiar with prior to the evolution of crypto, like cash, treasury securities, and so forth. So I do think we need very strict consumer protection regulations on Terra and similar algorithmic stablecoins.
Bringing that up, of course, we did see recently someone, the Treasury Department actually banned Tornado Cash. Again, it's a use of it's basically the use of code, banning the use of the code for transactions. That raises the question: can it also ban the use of algorithmic stablecoins, for instance? Is that something, given that that's basically code and it is also considered, it could be a threat to stability, economic and financial stability, given what we saw happen with UST and what it caused for the overall crypto market and what it could potentially do to the general traditional finance market? Does it make sense, or is it possible, given that this precedence just happened, where we had the Treasury Department say, no, you can't use the code for Tornado Cash? Could they then say, you also can't use the code for this or that algorithmic stablecoin?
Well, I think approaches like that, outright banning, don't typically succeed under our framework. China may be able to do that, but that's not typically how we go about things. But there are ways, I think, that we can bring about meaningful regulatory standards. The Financial Stability Oversight Council that Amitaj referred to earlier, has certain powers. Now, I don't think Terra was systemically important, but if something were determined to be systemically important, then the FSOC could mandate regulation. The CFPB may have authority to propose consumer protection standards. The OCC, the Office of the Comptroller of the Currency, the Fed, and the FDIC can obviously restrict the interaction between banks and traditional financial institutions and something like Terra. So I think there are approaches, and I'm sure regulators are looking at those as they have been.